So this is a new series called Master Your Mistakes. Today we have James Coursier. James is a reoccurring guest on my YouTube channel. We've spoken about his journey to financial freedom in the past. Give a link to that. Also spoken about property investment. He's spoken about how someone else can achieve financial freedom. And today he's joining us on Master Your Mistakes to talk about key mistakes he's made, what he's learned from it, and maybe what he'd do differently and take us on a bit of a journey with it. It's a bit of an impromptu episode. We're here in Ericeira, Portugal. We only really thought about this an hour ago. We jumped in, beautiful location. The sea, might hear a few crashing waves. Very off the cuff. But now I'm going to pass over to James. He's going to first set the scene. What is the big mistake he's going to talk about? And then dive into the story. James, what is the big mistake that you'd like to speak about today?
Well, I made a lot. I think it's part and parcel of doing business and putting yourself out there. And I think, like, if you want something big in life, like, you kind of have to be willing to take risks, and that effectively comes with making mistakes of all sizes, small and big. But when we were talking about this earlier, I was having a think about which one to talk about. Probably the best one that came to mind was COVID, because in the kind of year leading up to COVID, I had gone big on Airbnb. I spent a fortune buying property specifically for that, refurbed and spent tens of thousands of pounds getting them ready to go, and multiple. They all literally listed like months before COVID hit.
And by listed, you mean they went live. People were meant to start booking them.
Exactly.
You were meant to start making income and a return on your investment on the back of them.
Yeah. And I was like, yeah, man, like, this is my retirement plan. I'm good. Like, sorted. And I was like, maybe not. But, you know, it was a bit of a lesson. And I think, I mean, although it was annoying and it was a shock and it was frustrating, I look back, I didn't think it was that big a deal. And I'm trying to think why.
And then you're saying at the time you didn't think it was a big deal, or with hindsight, you're actually like, you know what? It wasn't that big of a deal.
A bit of both. Yeah. Well, I would be lying if I wasn't stressed out at the time. But it wasn't, I didn't react as badly as I thought I would have. And I think it's just because you just get so used to things like this happening in business all the time, especially in property, that you just see it as inevitable. And so it just felt like another one of those. And I think that's such a really good approach to take in life or business. It's just that when something big happens, like, it's just another one of those. How do I navigate this?
And taking us back to COVID, it was really kind of January 2020 when COVID started really hitting the news. And then by February sort of time, this is when governments are talking about going into lockdown. And then we went into lockdown in March. At what point on the kind of COVID news cycle, right up until the point when it's lockdown, were you like, damn, this is going to hit me in my Airbnb investment?
There was a bit of naivety and ignorance of like, oh yeah, I'll be fine. Until it wasn't. And then they're like, okay, right, like, let's just change course. So just very quickly, I was like, right, we've just got to convert these buy-to-lets. Let's just get them rented out. Obviously, a lot of people weren't moving at the time, so it's actually quite hard to rent them out. But luckily, because they were all done to a really high standard, newly refurbished, we actually got really good money for them, because there were key people that just needed to be there over COVID. They were coming back from wherever they were working or living, and coming back to see family or whatever. And they just wanted somewhere nice.
And this is private renters.
Private renters, yeah. So it was fine. Like, I didn't make as much money as I thought I would, But I was like, right, okay, well, if I can't do that, what can I do? And how do I make the most of it? And who do I rent these to still generate strong income? But I think a key thing that came out of it was like, okay, well, I can't do this whole Airbnb thing. Like, now what do I do? And so I then was like, right, well, where is the opportunity during COVID? And because everyone was terrified about the property market at the time, everyone was convinced it was going to crash. No one was buying property. And some people wanted to sell. And so I was very bullish on property at the time. I knew it was going to go up considerably after COVID because of, I take an economics, macroeconomic look at the world. That's how I invest. And so everything I was seeing, I was like, this is not going to crash. There's nothing here that would cause a crash. You need a bubble. You need a ramp up for a crash to occur. There was none of that. And actually, there were a lot of things working in the opposite direction. In part because the UK and many other countries were printing insane amounts of money. And anyone who studies economics knows when that happens, that money inevitably goes into assets like property, and asset prices just go crazy afterwards. But because there was no demand during COVID, because everyone was doing that thing, you didn't see that. So I knew when things came back to life, all assets would have just shot up. So I saw a massive opportunity.
So that's quite a rational take on an economic crisis, which I think oftentimes people would like to think that they behave rationally in that sort of crisis, but very few people do. Why do you think during this period you took what is quite a strategic approach to investing in general? To use that phrase, greedy when everyone else is fearful, and fearful when everyone else is greedy.
To do well financially, you've got to understand the fundamentals. But they're quite simple to learn. But you do need to learn. But the main thing I see that gets in the way of people succeeding when it comes to money and most other areas in life comes down to psychology. It's psychology that's usually the biggest thing getting in the way. And so if you have poor psychology around money, that's the thing that's getting in the way. And to take an example, there's been study after study where people have looked at the returns in the stock market, and then they've looked at the average returns of everyday people investing in the stock market, and it's considerably lower. And then they look at why, and it's because of the buying behavior. They buy high, they sell low, and various other things. And it's because it's very hard to take the emotion out of things. And the best performing group of people as investors are dead people because they're not tinkering, they're not messing around with it. And so, I'm emotional, right? Like any human being. I think I'm quite fortunate in that I don't tend to get caught up in things. When COVID happened, I was like, okay, it is what it is. Let me just make the best of it. Like I didn't just sit around. I was like, right, there are certain things I can now not do, and there are certain things I can now do. And there are risks and issues with this situation, and there are opportunities. Let me find those opportunities. The more unstable, the more crazy something is, the higher the risks and issues around that, but also the higher the opportunities are. Because there's a lot of change and settlement. There's value in finding what people aren't doing. So I kind of look at it like that. I need to be more aware of what's going on, but also I'm looking for those opportunities. What else to say?
I think what would be really useful is to kind of almost take us back to the chronology of events. We've made these investments in Airbnb. COVID was hitting. COVID hit. We're in the lockdowns. At what point did you start thinking and going through with I'm going to invest in properties while everyone else is?
So when COVID happened, I was like, all right, okay. It is what it is. Like, I've just got to like make the best of it. Everyone was going crazy buying shopping trolleys up the food. I was like, guys, calm down. It's not World War III. I was like, okay, well, I can't go out and socialize, I can't party, I can't do all of the things I was doing before. So I'm just going to work because I can sit on my computer and I can get things done. I can progress my business and that nothing's getting in the way of that. And I just viewed it as like, well, it's a couple of years where I just focus on business. So that when COVID finishes, then I can ease off work and then do more socializing and more fun things. So I'm a big believer in making the most of the situation I'm in, right? Rather than just letting it happen and just kind of waiting for things to pass. I mean, we were talking about this before, but I genuinely believe that how you navigated COVID says a lot. There was a really good seminar I went to a long time ago, and he had us play this game. And then midway through the game, he said, stop. Notice what part you're playing in this game. Notice how you're showing up, how you're feeling. Are you active? Are you passive? And he said, how you're playing this game is how you live your life. And that's a bit of a gross implication, but I really believe that. It's like really take stock of like how you navigate things and then think like, are you happy with this? Like, what can you learn from it? Because we operate mostly out of the subconscious. So I essentially looked at the situation and I said, right, well, what opportunities can I make the most of this? What issues and risks do I need to navigate? How do I make the best of it in this chapter of life, in this chapter of the situation I'm in? And then when COVID finishes, do it again, but with the new situation. But to answer your question in terms of like the order of events, COVID occurred. I was like, right, okay, let's chill. Let me assess and take some time to see what's going on. Okay, everything's not going to work. So let's as quickly as possible. Right, I need to sort that out. So I'm generating money. So moved them on to buy-to-lets, but like furnished, high quality. Made sure I got good tenants in because obviously things were kind of crazy. And then I was like, well, I'm not going to be able to make any more money from these properties. So I was like, well, what's the opportunity? Be able to buy properties at below market value at a good discount because no one is buying and some people do want to sell. So let me buy those properties. Did that and I partnered up with a friend who is in this space already. He was very negative on property as well, and he was working with space and everyone else around him wasn't buying. So it took a lot of convincing to persuade him to get involved in this. But I did that, and once I got him on board, then we literally just bought as much as physically possible. I bought as many properties as I could, as quickly as possible, because I knew that it wasn't going to last forever, and it didn't. It was only like a year. It was only like a buying window of about a year. And I was bought so many.
Do you put an approximate figure on that?
I probably bought like 15 properties in like a year, which is a lot. I mean, like to do that many transactions all in parallel when no one was buying and like the whole environment was saying no. They worked in our favor because although lenders were being really, really strict, because obviously they were nervous, no one was buying. So they wanted to make money, right? So long as we presented ourselves as a strong player, they were happy to lend to us and solicitors and everyone. Like no one had any work to do. So it was much easier. And yeah, just did that. And also we had really low interest rates then. So we were buying these properties for really, really good prices, paying hardly any interest on mortgage where we were getting lending. And so the returns on them on a cash flow basis was really strong. And then inevitably when COVID ended and then the market came back up, obviously everyone knows the property market went crazy, went up hugely, like almost overnight. We had a year where it was growing phenomenally. And then all of a sudden we had that really strong capital appreciation on top of really strong cash flows. So, that was probably the busiest time in my life when it comes to property. And ironically, that's the time when people were most fearful and not getting involved in property.
Mm.
And it speaks to this like classic thing of be fearful when people are greedy and be greedy when people are fearful. And honestly, that works, because if people are fearful, that human beings overreact. Yeah. So when something happens that's negative, almost always the result is much more extreme than the reality. So that result generally creates buying opportunity. And the same with people when people are greedy. When everyone thinks, oh my God, it's great, it's great, it's great, then prices or the situation goes way above the reality of the situation, which is why we get cycles. Cycles occur all over the place. And the main reason we get cycles is human psychology. That will never change, because humans will never change.
And thinking about now pre-crisis, investing in these Airbnbs and up to your plan, what part of that do you feel was a mistake? Or if not a mistake, what do you wish you'd known more at the time? What would have maybe changed your decision making or the actions that you took?
I mean, obviously, if I knew it happened, I wouldn't do it. But had I known what I know then, I wouldn't have changed it. Like, at the end of the day, to do well, you've got to take risks. And of course, I could have not chosen Airbnb at the time. I could have just chosen buy-to-lets or something more standard, or just put it in the stock market, right? Which would have potentially have done better. But then the stock market crashed because of COVID. So everything did poorly during COVID. But then notice how quickly the stock market returned after the COVID situation, how quickly the property market started to do well. And actually, it didn't really drop that much. So I guess my key point is it's totally okay for things to not work out well. And when you take risk, it's inevitable, but you've got to be quite so the key is it's important to take risks because that comes with like doing well. And it's okay. And it's inevitable for things to do poorly sometimes. But what's really important is to, before you do things, play through worst case scenarios and think, if this happens, what's going to be the result? And can I handle that? Can I deal with it? Because the people who got screwed over in 2008 are the ones that went bankrupt, the ones that had all their properties repossessed because they just couldn't pay their mortgages. The people who weathered 2008 ended up doing phenomenally because it went down and then it went back up and then it went on a roll, whether that's the stock market, properties, whatever. So I already thought about that. And I wasn't expecting it, but I thought, well, what would happen if this is happening? So, I was still juicing strong active income. I had other sources of investments. So even though this happened in the property market, there was a period of time where I was making money and I had to pay mortgage fees and other things were going on. That was okay. Like I still had money. I still had savings. I had money in cash so that I could weather that storm. What's really dangerous is you have those things and you're really exposed. If you're really over leveraged and you have no room for mistakes, that's when you get into a really sticky situation.
Are there any points in your financial journey, or what point rather in your financial journey have you felt most overexposed? What's the point you thought I've taken a big bump? Not necessarily an irrational bump, but a big one.
Well, I mean, at the moment we just bought a £1.7 million building with 7 flats in it. Very expensive. Yeah. Biggest investment of my time. Never would have thought I'd ever buy something like that. When I started one of this, I just thought I was just going to go and I just standard and then it's lets and just use it as something really nice. So 10 years later, doing like crazy deals. But that's just, I guess, part of the growth cycle. And I hear similar things when I talk to other friends of mine that are in business. And then at the same time, we're also doing a development. So, we will just stop planning and we're selecting which contractor to use. And it took me like £1 million just to do the work. Yeah. Forget like the cost of the land and the infrastructure that you're going to build on. So yeah, pretty scary. Feeling like those numbers, are big for me. And so the bigger the numbers, the bigger the implication when things inevitably go wrong. So, but I always just try to, one step at a time, accept that things are going to go wrong, create space in the system to allow for that. Just view it all as a learning journey and we step to the next whatever that is, whether it's tea or so like
Now, final question. Think about someone in 2025 who is maybe about to make a similar investment in Airbnb property to the one that you made pre-COVID. So pre-COVID, you didn't know COVID was coming. And right now, no one knows what crises there might be in the future. What advice would you give to them now?
Well, property is a great way of making money from money. It's a really rubbish way of making money without that. So if you want to play the property game, you need a strong form of active income, whether that's employment or your own business. So yeah, if you want to do the property game, whatever that is, then make sure you've got a strong active income. And if you've got one, great. But if it's not like that amazing and you're not making good money, then I would focus more on that. Focus on making more income, because to become financially free, you need to earn well, save strong, and then invest. If you focus on investing and do really well in that area, great. You might push up the returns you get. But if you're getting 10, 12, 15% on a very small amount of savings, well, that's not really going to change your life. Right? So yeah, don't neglect that. It also allows you to make mistakes, right? Because if you go into whatever strategy in property, it doesn't quite work out, you're still generating strong income, right? So you can cover losses. Like if it takes you a little bit longer, it's all good because you're living off the money you're making actively, plus your savings, well, so there's space there. And even if you make mistakes and you're hitting a loss in your property business, again, you can cover that, right? So it allows you to take much bigger risks to get that property business or property strategy into something much more lucrative, if that's what we're pushing for, right? And then once you've done it for a little while, it's become tried and tested, you're feeling stronger and more grounded in it, then you don't need to be so reliant on that active income. Then you can increasingly move more and more towards property full time, either as a business or as a vehicle to live off. However you want to go, whether you want to go bigger or ease off and spend more time living your life rather than trying to make money.
Excellent. Super fit. Okay, James, thank you for another episode.
So,
Boom.